Very good morning, everyone. So let's start with the revision of clubbing of income. So if you will see, this is your study material, page number 4.24. It says the question number one, test your knowledge question. It says Mr. Sharma has four minor children, two daughters and two sons. We understand that the minor child income. And guys, whenever we see child in income tax, we include the natural child, the biological child also, stepchildren as well as adopted children. So stepchildren as well as adopted children would be included in children. But if you will see grandchildren, so if there is any income of a grandchildren, please don't include it in the hands of grandparents. So only children income will be included, inclusive of stepchild and adopted child, include them. But for grandchildren, don't include that income. Okay. So this person has four minor children, two daughters and two sons. The annual income of two daughters is 9,000 and 4,500, and of son is 6,200 and 4,300. So these are the income of the child. And they will be clubbed in the hands of either father or mother, not in anybody else's hands. So either in father hands or in mother hands. So let's say father has given some money to the children and children is earning income on that. So will it be clubbed in the hands of father? No. Whose income is higher? So whose income before such clubbing is higher? Either father income is higher or mother income is higher. It will be added in that hand. Correct? And once it is added, let's say for example, first time we are adding this income and it will be added in the hands of mother. So in subsequent year also, it will be added in the hands of mother hands only, unless and until assessing officer go ahead and change it. So in subsequent year also, in subsequent year, we will not see that what is the level of income of father, what is the level of income of mother. No, only at the first time while clubbing that income for the very first time, we will see the level. And in subsequent year, we will not see, it will be continue to be clubbed in the hands of that parent only. Correct? And we understand that there are few types of income which is not clubbed in the hands of parents. What are those? If you remember, if the child is having an income because of his skill, because of his knowledge, then because of his talent, then we will not club that income. And if he is getting his income from manual or physical labor, so manual labor he is doing, he or she is doing, and then they are getting the income, we will not club that. And the last one, if the child is physically handicapped, then also including blind, deaf, and dumb, then also we will not club that income. So if the in these three cases, the income will not be clubbed. And the last thing about the minor child, which you should know, is that if you are adopting default regime, then simply go and club the amount without giving any exemption. But if the assessee is following an optional regime, then 1,500 per child. Is it per month? No, it is a fixed limit. That what is the income of 1,500 rupees, whichever is lower, that will be the exemption available only under optional regime. It is not available in default regime. So this was the basic provisions regarding the minor child income. Quite important for the examinations and easy also. No? It's not difficult, right? So two daughters, this much income, two sons, this much income. The daughter who has income of 4,500, so this income as 4,500 was suffering from disability specified under section 80U. So this assessee, the child is suffering under disability. This disability as defined in 80U. So as of now, we are not giving the 80U deduction. We are doing clubbing. So let's say if we would be giving the deduction, we can give the 80U deductions also, but not 80U. Not 80U, because in 80U actually only the disability is defined. Correct. So we understand that in disability case, there is a fixed flat deduction of 75,000. And if the assessee is severe or the dependent is severely disabled, then 1,25,000. So we understand 75,000 or 1,25,000 in case of severe disability. So this deduction, if the assessee himself or herself is disabled, then 80U deduction is there, right? And if the dependent is disabled, then 80 double D deduction is there. Correct. So why they have, so now who is disabled? The daughter is disabled. So in this case, why they have mentioned 80U? Is in 80U just disability is defined, right? So they have just used the word 80U here, they have used the reference of 80U here, that whatever is the disability which is defined as per section 80U, this child was disabled with that disability. Got it? So in case if they will be asking about the deductions also, and if they will mention that this daughter is, see, 80U, we will not get the deduction because assessee is not disabled. Mr. A is not Mr. Sharma is not disabled. The daughter is disabled, right? If Mr. Sharma is disabled, then 80U deduction is okay. But if somebody else is disabled who is dependent on them, then who is dependent? Spouse or children, brother, sister, or parents. Correct? So if they are disabled, then 80 double T. So right now, I don't think that we have to do deductions. We have to do clubbing right now. Let us see what they are
Sir,
asking us. Yes, please.
sir, what you're writing on the screen is not visible, sir.
Is it? Okay. Give me a moment. Okay. Thanks for reminding, Smriti. So whatever I have said, have you understood, guys, till now?
Yes, sir.
Yes, sir.
Okay. Now compute the amount. So here I was telling you that 75 in 80 double D and 80U there is a flat deduction, but 80U is available only for the person who himself or herself is disabled. If assessee himself or herself is disabled, if dependent is disabled, then 80 double D. But in this case, let us see what are they asking. They are asking about the clubbing or they are asking about the total income. Compute the amount of income earned by minor child to be clubbed. So they are just asking about the clubbing. So we don't have to give 80 double D or 80U deductions over here. Compute the amount of income earned by minor child to be clubbed in the hands of Sharma, assuming he has exercised the option of shifting out of the default tax regime. So he has shifted out of the default tax regime. So in this case, what will happen is, see now, nobody is earning income because of physical, manual labor, knowledge, or talent. So this daughter income, this minor child income, 9,000 will be clubbed in the hands of Mr. Sharma. So there is no information given regarding the mother. So we'll add in the hands of Mr. Sharma. So 9,000 will be added. And since if we are following default regime, then 9,000 totally would be added over there. But if we are following in this question, we are following optional regime. So 9,000 minus 1,500. So 9,000 minus 1,500. So only 7,500 would be added with respect to this daughter. And with respect to two sons, 6,200 and 4,300, and give 1,500 exemptions from both of them. From each child, 1,500 is not per month. 1,500 is fixed limit, right, for the year. So it is, when I am saying for the year, please don't understand it like this, that the 1,500 for the year, so 750 for 6 months. No, 1,500 is a fixed limit, right? So 6,200 minus 1,500, it will be added in the hands of Mr. Sharma. 4,300 minus 1,500 is would be added. So let's say this is not 4,300, it would have been 1,300. Then only maximum deduction we can give is 1,500, but the amount of income is 13 only. So we can give the deduction of 1,300 only. So three child income will be clubbed, but the child who is physically disabled, as disability as defined in 80U, so it is 80U is just the reference. So in this case, this income will not be clubbed. So I believe that you will be able to do this. Next, second question. During the previous year 24-25, the following transactions occurred in respect of Mr. A. So it is, Mr. A has a fixed deposit of 5 lakh rupees in a Bank of India. He instructed the bank to credit the interest on the deposit 9% per annum from 1/4/24 to 31st March 25 to the saving account of Mr. B, son of his brother, to help him in his education. So what he is doing is he transferring the fixed deposit in the name of the brother's son, or he is just instructing the bank to credit the interest? So what he is doing, he's transferring the income. He's transferring the income without transfer of asset. Without transfer of asset. Only the income is transferred and the asset is not get. What is the asset? Asset is fixed deposit of 5 lakh. And he has instructed the bank that whatever is the interest which I'll be earning, just credit this in my nephew's account. So whenever you transfer the income without transfer of asset to any person, either your relative, non-relative, doesn't matter, it will always be clubbed. So 5 lakh, 9% interest, and it is from 1st April 24 till 31st March 25. for the entire year. So 5 lakh into 9%, 45,000 will be clubbed back in the hands of Mr. A. So during the previous, the following transactions are earned. What are we required to do is, in this question, they're asking us examine, again, this is stuck. Okay. Examine the tax implications of each transactions and compute the total income of Mr. A, Mrs. A, and their minor child, assuming that they exercise the option of shifting out of the default tax regime. So again, we are shifting from the default tax regime, and we need to examine the tax implication of each transactions and compute the total income. So we need to compute the total income also, and simultaneously we have to examine the all transactions. So we can give the note for that each transaction, but we need to compute the total income over here for Mr. A, Mrs. A, and their minor child. So let's see. First, read the question, then we'll do this. Okay, so this income we understand it will be Mr. A's income. It will be clubbed IFO's income, right? So under which head we club the income? It depends what type of nature of income that it is. So if that nature of income is interest income, IFOS income, so it will be clubbed back in the head of IFOS only. B point. It says Mr. A holds 75% profit share in a partnership firm. Mrs. A received a commission of 25,000 from the firm for promoting the sales of the firm. Mr. A possesses no technical or professional qualification. So what will happen over here? She is getting a remuneration from from a partnership firm where Mr. A has a substantial interest. So if Mr. A has a substantial interest, what is substantial interest? 20% or more interest. If Mr. A has in any concern where the spouse is receiving any remuneration without any qualification and experience, so you understand that income will also be clubbed. So 25,000 will be clubbed in the hands of Mr. A.
Clubbed in hands of Mr. A.
Correct, correct, Haru. C. So this C point says Mr. A gifted a flat to Mrs. A on 1st April 2024. During the previous year 24-25, Mrs. A's income from house property computed was 52,000 from such flat. So please tell me whether this income will also be clubbed or not. So Mr. A gifted a flat and 52,000 is her house property income from such flat. What do you think, whether this income should be clubbed or not to be clubbed? Tell me. What do you think? You might be right, you might be wrong, doesn't matter.
It should be clubbed
Why? Because we have gifted any asset. We have gifted any
without
asset
consideration.
without consideration. Without consideration. So this income should be clubbed. And please remember, there was a one provision regarding husband and wife, that let's say, for example, an individual transfers a house or a building to his or her spouse without consideration, then clubbing will not be there. This is the case of deemed ownership under section 27. If we transfer any other asset, then clubbing will be there. But if we are transferring house
Also,
house property, then in that case, clubbing will not be there. Although income will belong to again the transferor, but without clubbing, it would be deemed ownership concept. So in this case, it will not be clubbing, it will be the deemed ownership. So Mr. A will be the deemed owner in this case. So although it would be the income of Mr. A, ultimately the calculation is same, but the provisions are different. So we will not apply the clubbing provisions over here. We will apply the house property provisions here under section 27. Understood, guys?
Yes, sir.
So
yes.
are you able to
Yes,
recall
sir.
this now? So if we have, see, if we have transferred cash means money. If we have transferred money and wife has converted this money into flat or into house, then in that case, clubbing will be there. In that case, clubbing will be there. But what are we transferring? So just see that what are we transferring? So we are transferring actually a house property. So in that case, it would be the deemed ownership concept, not clubbing. D point. Mr. A gifted 2 lakh to his minor son, who invested the same in a business, and he derived income of 20,000 from the investment. So again, please tell me whether this income would be clubbed or not.
Clubbed.
Clubbed. Why? Because it's a minor son income. So minor son income, it would be clubbed. So whatever the income which will drive, it will be clubbed. And under which head it will be clubbed, guys? What do you think? Under which head it will be clubbed? PGBP.
GBP.
Okay. So actually, guys, practically what it would have been there. See, Mr. A has started a business, but what he has done is he would have started a business in the name of his son, in his minor son. Even minor son is goes to school. He does not know that there is a business which is going on in his name. So what he is doing is, in order to evade the tax, he has started the business in the name of his minor son. So in that case, it is nothing. It is Mr. A's business only. So we will club this income. So whatever the income you will earn, it is not because the son is not earning this income because of his knowledge, talent, etc. He's not earning income because of his a manual or physical work, or physically handicapped case is also not there. So this income will be clubbed. And then key point, it says,
Sir, if the minus sign becomes major, then the income
then
will
it will not be
be
clubbed. Then once he
okay.
become major, then it will not be clubbed. From that year, will not club that income. Key point, Mr. A's minor son derived income of 20,000 through a business activity involving application of his skill and talent. So we have not transferred anything, but this guy is having his own talent, and because of this talent, he is earning a business income. So this income will not be clubbed. It would be
Not
Mr.
club.
It would be son's income only. Correct. So during the year, Mr. A got a monthly pension of 10,000 rupees. So this is Mr. A's salary income. He has no other income. Mrs. A received salary of 20,000 per month from the part-time job. So this is Mrs. A's salary income, and she is getting it from the part-time job. So this will also not be clubbed. So examine the tax implications. So now please tell me. So Mr. A, this one is actually Mr. A's income. So it is not for the minor child. Actually, we have transferred the income without transfer of asset. So this is Mr. A's income. This one is whose income it is. We have given it to. It is Mrs. A's income, which she is deriving from without any qualification or experience from the concern where Mr. A has a substantial interest. So this is again Mr. A's income. Second is he gifted a flat to Mrs. A. So he has gifted a flat. So it would not be clubbing. It would be Mr. A's income only. Then Mr. A gifted 2 lakh rupees to his son. So it is minor child income. So minor child income, and that minor child income, that will be clubbed. Now it will be clubbed in the hands of Mr. A or Mrs. A. It depends whose income is higher.
Higher.
Understood? Correct. So although Mr. A has gifted it, but we will see while clubbing that whose income is higher. So E income is purely minor child income. Then Mr. A got some monthly pension. So this is A's income, and her Mrs. A, her spouse, is also getting salary. So we have Mrs. A's income also. So we have A income, this. Mr. Mrs. A's income is this, and minor child income is this. And about this income, we are not sure in whose hand it will be added. Once we'll get to know what whose total income is higher, we'll add in that particular hand. Everybody okay with this? Till here? So
Yes, sir.
let us do this question. Okay. Solution number 2. Computation of total income. Assessment year 25-26. So this is Mr. A. This is Mrs. A. This is minor child. So in this case, first income. So let us see which head we have. So just see that which head we have, which head we don't have for Mr. A. See, we have five heads. For Mr. A, I believe salary income is also there. So there was salary was there. Yes, he's receiving a pension. Salary income is here. House property income is here. PGBP could be there because his son is having a business in the name of his son. PGBP income is there. Capital gain income is not there. IFOS income is there. So capital gain income is not there. Otherwise, we can see most of the income is there. PGBP, we are not sure that in which hand, in whose hand it will be clubbed. So first, we'll start with the salary. So it's not necessary that you should start with the salary only. You can pick up any of the head. That doesn't matter. But yes, as of now, we are doing little systematically. So I'm starting with salary. So income under the head salary. So he is getting 10,000 per month, 1,20,000, correct? And there is a standard deduction also, 50,000. 70,000 would be Mr. A's salary. We can calculate for Mrs. A also because it has been given to us that she is also getting a salary somewhere of 20,000 per month. So 20,000 into 12, 2,40,000 minus standard deduction, 50,000. She is also getting 1,90,000 rupees. Got it? Second, then second would be Mr. A is getting IFOS income. Let us see house property income. So house property, he is a deemed owner. So there is a house property income also 52,000 rupees. And it is computed income. So this is house property. He would be a deemed owner. So since he is a deemed owner, there is no clubbing, but because of deemed ownership concept, we are actually making it taxable. Then, then do we have PGBP income also? So PGBP income, we will see that whose income is higher. PGBP, son's business to be clubbed. So as of now, we are not sure that we should club here or we should club here. So we'll leave it right now. Then we don't have a capital gain, but we have income from other sources. A has a fixed deposit, which is given to Mr. B's, his brother's son, his nephew. So that will be clubbed 5 lakh into 9%, 45,000. Interest income, transfer of income without transfer of asset. See, if we would have transferred the asset also, if we would have transferred the asset also, so we have not transferred it to minor child or we have not transferred to spouse. So if we transfer asset permanently to any other person, then the asset is gone. So the asset is gone, the income is also gone. So there would be no clubbing in that case. Okay, na? So in this case, we have not transferred the asset, we have transferred the income. So this would be 5 lakh into 9%, and that too for full year. 5 lakh into 9%, 45,000 is the IFOS income. So this, then any other IFOS, yes, he's receiving her salary 25,000 without any technical qualification or skill. Commission to spouse without knowledge or skill. 25,000. So this would be, this is done, this is done. House property is done. Business, Mr. B, minus underived. Minus son income would be 20,000 because he's involving his skill and talent. So this is business income of minor child because he's having it business income 20,000 rupees. So 20,000 rupees will go in PGBP income of the minor child because of his skill and knowledge. Then the last which is left is that this income of minor child which he is earning of 20,000 rupees. Okay. So it will be clubbed in the hands of the parent whose other income is higher. So if we will see that Mrs. A's income is 190, and if we will see Mr. A income is 70 plus 52 plus 45 plus 25.
1,92,000.
192. So
Yes, sir.
his income is higher. So this PGBP of 20, this is also 20. How much it is? 20,000. This is also 20. This is also 20. Okay. So this will be clubbed over here. Son's business income to be clubbed as Mr. A's income is higher. So this is what it is. So the GTI would be, so you said 192 now. So if it is 192 to
2
1,
lakh
2,12,000.
correct. And this is 190 and this is 20,000. Minus chapter 6, say we don't have anything. So this will become our total income only.
Sir, I have one doubt, sir.
Yes, please.
Sir, income from the investment will not be under the head IFOS.
Income from investment. Income from investment. Actually, what are they saying? Actually, we have invested in a business. We have invested the same in the business. So see, sometimes you also call that if you are starting a business, then you say that I am making an investment in this business. So whatever you earn from that, it would be business income only. So they have used the word investment, but they have also said that where we have invested the money, we have invested the money in the business, and he is deriving income from. See, Mr. A, 2 lakh rupees, and whose business it is. It is not somebody's else business that we are investing the money. It is not like we are investing the money in shares or debentures. We are investing the money in our own business. So they have not mentioned anywhere that it is somebody else's business. So it means that it is our own business. So that would be our IF, that would be our PGBP income only. So you can assume it over here if you are a little bit confused at whether it should go in IFOS or PGBP. So you can also write an assumption that it is assumed that this is Mr. A's business only, or or the son's business only. Correct?
Okay, sir. Thank you, sir.
No problem, Sugandha. Everybody done?
Yes, sir.
Okay. Now, question number 3. Mr. A has gifted a house property valued 50 lakh to his wife, Mrs. B, who in turn has gifted the same to Mrs. C, their daughter-in-law. The house was let out at 25,000 per month throughout the year. Compute the total income of Mr. A and Mrs. C. Will your answer be different if the said property was gifted to his son, husband of Mrs. C? Okay. So again, see, what we have done is Mr. A has gifted this house to his wife. He has gifted this house to his wife. So we understand that whenever we gift any asset other than house property to wife, then whatever the without consideration that whatever the income it shall be clubbed. But if we gift is what it is house property, then there would be no clubbing. Then in
Owner.
that case, Mr. A would be the deemed owner. It would be the deemed owner, and house property will remain with Mr. A only. Means the house property income would be taxable in the hands of Mr. A only. Now, what she has done is his wife in turn has given this to his son's wife. So, whenever you give it to the son's wife, so this income will be clubbed over here in the hands of wife. And since we have gifted this house property to the wife, so this income will become the income of Mr. A. So what Mr. A would have done is to avoid the taxes. So he was saying, okay, what I'll do, I have a house property where I have an income and unnecessarily I'm giving a higher rate of tax. Let me give it to you. You give it to the son's wife, and let us let us make this transaction complex. So what it is actually behind the scene is, so they have given to the son's wife. So in this case, if it is given to son's wife, then first of all it will be clubbed over here, and the second transaction it should be clubbed here. But the thing is that what we have given is the house property. So in this case, this would be Mr. A's income only. It would not be the income of wife. It would not be the income of son's wife. So it will be Mr. A's direct income only. Now, so how much we will make the income? 25,000 per month is the rent. So 25,000 into 12, 3 lakh, it will become the GAV, right? And from GAV, you can give the standard deduction 30%. So 2 lakh, how much would be 30%? 90,000. So 2 lakh 10,000 would be the house property income of Mr. A only. Understood? Now they are saying that what will be your answer if the said property was gifted to his son, husband of Mrs. C? So Mrs. C is nothing but son's wife. So they are asking that what would have been the case if this property has been given to son? And obviously it's not minor son, it's major son.
Not clubbed.
So in that case, if we'll give this property to major son, so the asset is also transferred, and obviously the income is also transferred. And in that case, because we know that there we have a special provision related to spouse, whenever we give the income to spouse, the asset to a spouse, son's wife, or to minor child. So this is not spouse, this is not son's wife, this is not minor child. So any other person. So this, in this case, it is any other person. In that case, there would be no clubbing. So it would be son's income only. So it would be son's income only. House property income 25,000 into 12 would be the GAV, minus standard deduction 2,10,000 would be son's income. Mr. C's income, not anybody else income. Understood, guys?
Yes, sir.
Now, fourth says a proprietary business was started by Srimati Rani in the year 2022. As on 1/4/23, her capital in the business is 3 lakh. So she has started a business and her capital in the business is 3 lakh rupees on this date. Her husband gifted 2 lakh rupees on 10/4/2023. So whether he has gifted the money on the first day of the previous year, no, he has gifted the money on the in the middle of the year. Which year he has gifted the money? This money has been gifted. This date falls in which year? Previous year, 23/24. He has gifted the money. So will you club any income? So now Mr. Her capital was 3 lakh. 2 lakh is more invested in the business. The capital has become 5 lakh. So in this case, we understand now the capital of the business has become 5 lakh. So whatever is the profit. So how much is the total capital of the business? 5 lakh. And out of which Mr. A has actually, or the husband has actually invested 2 lakh. Out of 5 lakh, 2 lakh he has invested. 2 upon 5, I can say approximately 40%. So 40% is the investment of the husband. But in this year, we will not club anything. Why will not club anything? So if you remember, our formula was that we, in the numerator, we see that the amount invested by the spouse as on the first day of the previous year. So on the first day of the previous year, he has not invested any money. So because if you will ask me that on 1st April 2023, how much is the money which is invested by the husband? The answer is no. Although he invested it, but on 10th of April, not on 1st of April. So in this previous year, there would be no clubbing, right? But in the subsequent years, there could be clubbing. Why? Because let's say, for example, if we will see of previous year 24/25, the first day of this year is 1st April 2024. So if somebody will ask Srimati Rani, if somebody will ask her that on this day, has your husband also invested some money? The answer is yes, because she will say that actually last year, somewhere in the middle of the year, last year my husband has invested the money. So if somebody will ask you about this year, so how much is the in the numerator we see amount invested by the spouse as in the first day of the previous year. So how much amount was invested? 2 lakh. And how much was the total capital we will see? So now this 2 lakh was invested on 10/4/2023 to her, and some is invested by Srimati in her business on the same date. On the same date, she is invested it. But in this year, will not club because on first day of the previous year, the amount was not there. Rani earned profit of rupees 1,50,000 in the financial year 1,50,000 and 3,90,000 in this year. Compute the income to be added for assessment year 25-26. So we are saying that assessment year 25-26, how much income will be adding? That is previous year 24-25, how much income we would be adding. So what we will be seeing is in the numerator, we will see that as on 1st April, see, in this year, we will not add anything. So you can give the reason why we will not add anything, because as on the first day of this year, amount was not invested by husband. So in this year, nothing will be added. But in this year, we will see that on 1st April 2024, first day of the previous year, how much money is invested by the husband, as on 1/4/2024, as on first day of the year, how much is the amount invested in the business? What is the capital of the business was as on 1 April 2024? So we will see last year, initially the capital was 3 lakh and 2 lakh was also inserted during the year. So last year capital was 3 lakh plus during the year 2 lakh also came in. So 5 lakh became the capital during the last year. And last year also we have actually incurred some have actually earned some profit. So how much profit we have earned? We have earned a profit of in this year 1,50,000. So in this year itself, we have earned a profit of 1.5 lakh. So if somebody will ask me that as on 1st April 2024, how much was your capital of the business? So the capital of the business as on April 24 was 5 lakh, sorry, 3 plus 2, 5, the capital, and 1.5 lakh profit which we have earned in the last year prior to this. So it would be 6.5 lakh. So what we will do, as on 1/4/2024, how much amount the husband has invested? Husband has invested in the last year itself. How much? 2 lakh. Out of the total capital of this year is 6.5 lakh. So in this ratio, we will distribute the profit. And how much is the profit earned during this year? So during this year, we have earned the profit of how much? 3,90,000. So 3,90,000 would be split into this part. So 3.9 into 2 by 6.5, whatever the amount you will get. In this ratio, you will actually add this income in the hands of the husband. I believe that you are able to recall this provision also. Everybody?
Yes, sir.
So this was again a quite important type of question where the husband or wife or any one of them invest the money in the spouse business. So you have to see that as on the first day of the previous year, how much is the money invested. So how much is the money invested? What was the original capital of the business plus any addition which has made during the last years? We will add that also. And if there is any profit or loss, we will add or subtract accordingly. So let's say in the last years we have profit, so we'll add it. If in last year we have losses, we will subtract that. So we'll assume that the capital, whatever we are assuming here, that whatever is the profit we have earned, we are retaining it into the business. So we are not drawing anything. So if let's say in this question, although it never came, but it might come that last year we have earned a profit of, let's say they are saying that last year we have earned a profit of 1.5 lakh. Let's say, for example, they would have also said that also in the last year, we have made a drawing of 50,000 rupees. So you understand that out of 1,50,000, whatever we are retaining, 50,000 we have withdrawn also. So in that case, the capital will become 150 minus 50. So 50,000 then we have to subtract also. But as of now, drawing provisions or drawing information is not available over here. So we'll ignore the drawing portions. Okay. So how much would be added? 2 upon 6.5 into 3.9 lakh. That would be the income of the husband. And under which head? PGBP, because this is PGBP nature income. So it will be added in the hands of PGBP, in the head of PGBP only. Okay, see the last one. Mr. B is the Karta of HUF whose members derive income as given below. So Mr. B is a Karta of HUF whose members derive income as follows. So this is income from Mr. B's profession. So this is not house property income. This is B's income only. So this would be the Mr. B's income. Mrs. B's salary as a fashion designer. So this is Mrs. B's income. Minor son D, interest on fixed deposit with the bank which were gifted by him by his uncle. So his uncle has gifted FD and minor son is earning 10,000 rupees. So this income is of the minor child, which he is not earning because of any talent, skill, or knowledge. Not neither he is physically handicapped also. So it will be clubbed in the hands of the parent whose income is higher. So as of now, if I'm not reading these things, so as of now, whose income is higher? Mrs. B's income is higher. Okay. So now one more thing is there. It says Mrs. B's salary as a fashion designer, and she is getting a salary of 76,000. Now, there is one more provision that whether this 76,000 is the computed salary income or we have to give a standard deduction also. So in this case, this is not mentioned over here that whether this salary income is a computed salary income or we have to give a standard deduction also. So here you will keep your assumption over here. So either you can keep it because it is not, had it been given 76,000 per month, etc. Then we understand that this is the salary which they are getting and now we have to give the standard deduction. But here they are actually not very clear that this salary is before standard deduction or after standard deduction. So whatever you want to assume, you can assume that. So here generally I will assume because after 76,000 it will become very less. So generally I'll assume that it is computed salary income. So there we have to write an assumption over here. Got it, guys? Even if you want to assume that it is before standard deduction, so you can give the standard deduction also. Now, minor daughter P earning from sports. So she has an income of 96,000 and she is earning from sports. Sports means that because of her talent. So this income will not be clubbed. This is minor child income only. D is winning from lottery. So D is winning. Who is D? Minor child. So minor child income is from lottery, 1,95,000. This is not from his talent, skill, or knowledge. So this 195 will be clubbed in the hands of parent. So there are three minor child income. So only this 10,000 will be clubbed, 195 will be clubbed. So we will see that whose income is higher. So in this case, if we are assuming that this is after standard deduction, so the mother income is higher. So we can add this in the mother's income. But if you are assuming that it is before the standard deduction, then it will be reduced. And if there is also nothing is mentioned that what type of regime they are following. So if they are not mentioned, we'll assume default regime. So we will give, if you are assuming that this is before standard deduction, so give 75,000 standard deduction also, and it will become 1,000. So 1,000 is not sounding so good. So that is the reason I'm not taking that assumption that it is before standard deduction. So I'm taking it is after standard deduction. Everybody understood? 95,000 you will not club. 95,000 you will not club because this is from the sports. Sports means because of his talent he is getting it. So I believe that you will be able to do this question, guys. So clubbing chapter is quite an easiest chapter among the entire things. Clubbing and set off are quite an easy chapters in the income tax act. And the good thing is that they are important also from examination point of view. So generally we get the questions of clubbing and set off. So tomorrow we'll be doing the set off. Till then, thank you so much, guys. See you tomorrow at 7:30 in the morning. Bye. Take care.
Thank you, sir.
Bye bye. Take
Yes,
care.
sir.